One of the things that is crucial if you want to be a successful trader is you must have market awareness. Now, market awareness, what is that? Well, it's knowing what's going on in the market, or the markets plural, right? So it's knowing what's going on in the equity market. So you need to know what's going on with the S&P 500 and the NASDAQ and the Russell. It's also what's going on with the futures market. What's crude oil doing? What's gold doing, right? And most importantly, market awareness. One of the things that you need to be aware of at all times, especially as an options trader, is the VIX. You need to know what the volatility index of the S&P 500, you need to know what that number is pretty much at all times. So market indicators, and specifically we're going to talk about two VIX related products today. We're going to talk about VIX itself, and we're also going to talk about VIX Futures, which is /VX. Now, market indicators, what does that term mean? Because we should define what a market indicator is. Well, a market indicator is a subset of technical indicators that can help traders interpret current market breadth and market sentiment. The most popular market indicator probably is the VIX. It's the 30-day implied volatility of SPX. SPX is the S&P 500 index. So let me go over to my trading platform and let me show you how we get the VIX number. So SPX, first go to the S&P 500 index. Remember, VIX is the 30-day implied volatility of SPX. It's the 30-day, the monthly implied volatility of SPX. So let's find the 30-day implied volatility of SPX. Well, go to the monthly options, and here is the first monthly option chain. It's February 16th, expiring in 3 days. That's too soon, right? So let's go out to the next month. The next monthly option chain would be March 15th. In 31 days. So 31 days, very close to 30 days, and you can see IVX is 13.9%. That is the current implied volatility of SPX, 13.9%. Well, let's go to VIX, VIX. And what is the value for VIX? It's currently at 13.9, right? So that is VIX. VIX is the 30-day implied volatility of SPX. And just like SPX has tradable options, you can also trade options on the VIX. You have option chains for the VIX. VIX does not have shares, just like SPX does not have shares to trade. These are index products. Index products typically don't have shares to trade. You can trade options on them if they have options available, but none of the index products have tradable shares. And if we look at the chart for VIX, this is the last about year, 2023 started here. So this is the last year and 2 months, the last 14 months or so. And you can see right now VIX is pretty low, trading at 13.9 currently, and you can see it's kind of been trading around this range for a while, but it has come down to this range. Before, earlier in the year, we did have some readings above 20. We were at 23 for a VIX, and if we go back about a year, we were having readings as high as 30 and 31 for the VIX. And if we go back even further, from the bear market year of 2022, which had a lot of uncertainty because of rising inflation. We've had a lot of banking crisis and some of the collapses with some of the crypto scams that were going on with certain companies. You can see we've had some readings of VIX as high as 35 in one case, VIX as high as 36 in this case. So, you do have some fluctuation with volatility. Now, low volatility is pretty normal. I'd say VIX being kind of low is the norm. It's a low VIX typically about 70% of the time, and that's when the markets are boring, like they are now. That's why it's only 13 for the VIX. When the market is just doing its normal thing, which is being boring, just slowly going up, gradually going up over a long period of time, VIX is low because there's no real volatility. There's nothing exciting happening. But about 30% of the time, when markets aren't doing that slow, gradual stair step up, that's when VIX is elevated, because that means something's happening, right? That could be, we've had a crash, or we're in the middle of a lengthy recession, a lengthy bear market, which has a lot more two-sided action. And a lot of times those up moves and down moves are much greater in velocity than in a boring market where you really don't have any, crazy moves. So the VIX is often referred to as the fear index, or the fear gauge, because it kind of gives you the level of fear in the market as far as traders, right? The VIX is a measurement of the prevailing sentiment of traders. When traders are calm and comfortable with what's going on in the market, VIX is low. When traders have a lot of fear, a lot of doubt, a lot of concern, then VIX is high. So why do you need to actually track VIX? Why do you need to check in on VIX and see what VIX is doing every day? Especially if you're not actually trading SPX. If you're not trading the S&P 500 index, why do you need to know the volatility of the S&P 500 index? Well, it's because the S&P 500 index gives you a good indication of whether volatility overall in the market is high or if volatility overall in the market is low. And if you're primarily an option seller, such as those of us that prefer doing an option strategy, such as the wheel strategy, my favorite option strategy, as option sellers, we prefer to sell options when VIX is higher, since the uncertainty in the marketplace means that the implied volatility of most stocks in the marketplace will be elevated, resulting in higher premiums. Because a really high VIX, that doesn't mean that the implied volatility of the S&P 500 index is the only thing that is high. It means everything that composes the S&P 500 index. Most of those stocks are going to have elevated IV. Some numbers to watch out for. I would say a VIX above 30 is great for option sellers. A VIX above 30 means there's a lot of two-sided action, right? There is some fear, some uncertainty in the marketplace. Most of the time, the VIX typically trades between 15 and 30, right? That's typical for the VIX. It's a 15 to 30 number. When the VIX is below 15, that's a really low VIX. And when VIX is below 15, it can be hard to find good trades, especially if you're an option seller. If you're a premium seller, so you like selling puts, selling calls, selling strangles, running the wheel strategy, selling cash secured puts and covered calls, you want high IV. And a VIX below 15, you're not going to find a lot of underlying stocks to trade that have high IV when VIX is that low. It can be tough to go find those good trades. Now, a low VIX is not all bad, especially if you're using the wheel option strategy, because a low VIX does imply that the market is being kind of boring, and it's probably we're in a bull market. Typically, if the VIX is really low, that's a sign that we're in a bull market and things are just slow and steadily going up, which is great for the wheel strategy because it's a bullish strategy. And if the market overall is going up, if you're using a bullish strategy, you should be making money using the wheel strategy, even if VIX is low. Of course, we'd still prefer VIX to be high. That way we get to sell our options for a higher price. We can get higher premiums, but of course, there is some risk to that because high VIX means that the markets are moving around a lot, right? So you do have to be careful, especially with those cash secured puts, if you don't want to accept an assignment on every put you sell. So, just be careful. But overall, as an option seller, you typically prefer high IV. But in the case of the wheel strategy, a low IV is not the worst thing in the world. Now let's talk about /VX. /VX is the VIX Futures. So if I go back to the TASTYTRADE platform, this is VIX, and /VX would be the VIX Futures. And they are very similar. They both are tracking the volatility, the implied volatility of the S&P 500, but they do it in slightly different ways. Therefore, the numbers for each are slightly different. While VIX prices are derived from the SPX option prices, remember, VIX is the 30-day IV for the SPX. The VIX Futures, the VX Futures, they're a reflection of traders' anticipation of the 30-day market volatility. So it's a 30-day best guess going forward of what VIX is going to be 30 days into the future. Now, some traders prefer to monitor VIX, while other traders prefer just to monitor /VX, the VIX Futures. Now, there's minor differences between the two. They won't necessarily reflect the same price, but I would say, in my opinion, the VX Futures, they do tend to be a slightly better reflection of current market sentiment, but they're very, very similar products. Whether you use VIX or the VX Futures, I strongly urge you to look at one of these two products every day. You should be monitoring one of these products every day to gauge whether volatility in the overall market is either expanding or contracting. Because if it's expanding, then if you're a short options trader, like if you trade the wheel strategy like I do, that's bad. My options are going up in price then, which means I'm losing on some trades, right? But if the overall market volatility is contracting, coming down, that means a lot of my short options should be losing their value, meaning I'm making money. So definitely monitor the VIX. If you want to be a successful trader, again, you have to have market awareness, and the volatility of the S&P 500, the VIX or the VIX Futures, is essential. What I tend to do, and typically on my trading sessions, I have a triple monitor system. Usually on one monitor, I have this 4-way grid of charts where I have the ES futures, the S&P 500 futures, NQ, which is the NASDAQ futures. I have the Russell futures as well. So those 3 index futures products really tells me what the overall stock market is doing. And then in this 4th grid, I have VX, the VIX futures. So that lets me know if volatility is going down, which you can see clearly volatility has been going down here in the last few months, which means overall, if I've been selling options this whole time, all those options that I've sold over the past 3 or 4 months, for the most part, have lost a lot of their value due to the IV coming down. So that was a very quick overview of VIX and the VIX futures. Now, if you want to learn more about options trading, including a little bit about the basics of options trading using market indicators like VIX and VX, and specifically if you want to learn how to trade the wheel option strategy, look for my book, The Super Wheel Option Strategy, available on Amazon, link in the description below. Peace.